US stocks trade cautiously after Donald Trump announces 25% tariffs on car and car imports. Gold, though, hits a record high of over $3,100 an ounce. Australia's budget this week sees planned bond issuance jump, and the People's Bank of China turns dovish. That's coming up in our 5 Things in 5 Minutes on Friday, March the 28th. And then, in today's bonus deep dive interview, ANZ Head of Asia Research, Khoon analyses how stock outflows from Asian economies, which have continued this quarter, are likely to keep flowing after the April 2 tariff announcements by Donald Trump.
The 2nd of April tariff announcement is going to be very important, and that's going to help dictate whether or not we see continued volatility in flows in the region, or we start to see a bit of a respite.
But first, in 5 and 5 with ANZ, US stocks are cautious this morning and bond yields are up after US President Donald Trump announced 25% tariffs on car imports and car part imports starting April the 3rd. Car maker stocks in Asia and Europe fell, as did GM and Ford stocks in New York as well. Gold, though, jumped to a new record high over $3,100 an ounce. The announcement comes ahead of reciprocal tariff news due on the 2nd of April, which may further dent global trade and confidence. Here's ANZ Head of G3 Economics, Brian Martin, on why financial markets seem to take the news overnight in their stride.
I think that's because they see this as being possibly part of the much bigger tariff review that is to come next week. And as a result, I don't think that investors, financial market participants are going to make big decisions just in this very preliminary announcement. I think they're also conscious of the fact that the profile of what we've seen from tariff announcements so far has been announce, pause, start, stop. If this is going to be part of a broader trade review that's going to include reciprocal tariffs, will those auto tariffs, which aren't due to come into place until the 3rd of April, form part of a negotiating strategy?
As of 4 a.m. Sydney Melbourne time, the US dollar index was down 0.2%. The Aussie dollar flat at 63.01 US cents. The New Zealand dollar also flat at 57.4 US cents. The 10-year bond yield in the United States up 3 basis points at 4.36%. The S&P 500 down 0.35%. The gold price at $3,093 an ounce. And oil up slightly at $69.79 US a barrel for West Texas. Number 2, more on the Australian federal budget now, and more from the Australian Office of Financial Management's borrowing update for the 2025-26 year. ANZ senior rate strategist Jack Chambers talks about the main reasons for $150 billion worth of issuance next year, compared to $100 billion for the current financial year.
The big change within that is an increase in the net issuance task, which is increasing from $17 billion to a bit above $70 billion. So whilst the issuance task isn't as large as some of the pandemic era tasks in terms of the gross issuance, the $150 billion, the net supply is quite large. And also, if you look at the increase in the free float of ACGBs, so that's the combination of net supply as well as the bonds that are rolling off the RBA's balance sheet as they mature. The increase in the free float is $110 billion, which is a record, easily a record. So it's almost like the amount of additional ACGBs or government bonds that the market has to absorb or the private sector has to absorb is a record high next financial year.
Number 3, Jack says net issuance in the current financial year was quite low compared to the forecast deficit, leading to a jump in 2025-26.
There was essentially a mismatch between the amount of money that the AOFM was raising and the forecast of what the government would actually need to borrow. That was because the AOFM, or the federal government, held large cash deposits with the RBA. The RBA acts as the banker for the federal government. So it was essentially planning on reducing those cash holdings this financial year. Next financial year, it's not planning on doing that.
Number 4. Yesterday, we reported on how ongoing energy relief in the budget will continue to repress Australia's headline inflation rate. ANZ senior economist Adelaide Timbrell says that keeps the focus on annual core inflation, which this week fell slightly from 2.8% to 2.7% in February.
The Reserve Bank generally looks at the trimmed mean inflation measure more than headline. You don't want to make a long-term decision like an interest rate cut or hike off something that could just be really short-term volatility. And that's why the trimmed mean is so important, and particularly at times like this where there are these really big swings in electricity prices as well as things like fuel prices, which go up and down quite rapidly as well.
Number 5. The People's Bank of China appears to have turned dovish, with the first cash injection into the banking system through its medium-term lending facility, called the MLF, since August. ANZ senior China strategist Zhao Pengxing says a change in how the People's Bank of China conducts the MLF auctions, from a Dutch auction to an American one, will also effectively act as a rate cut.
The change was significant because, firstly, it was the first net injection in 8 straight months, signaling that the PBOC became dovish before the US tariff shock. And secondly, American auction allows multiple bid prices so that unified MLF interest rate would no longer exist. This reform is not expected by the market.
Zhao Pengxing there. Now in today's bonus deep dive interview, ANZ Head of Asia Research, Khoon explains to my colleague Alex Tarrant how Asia's equity market outflows have continued this quarter and what might be in store after the April the 2nd tariff announcements by Donald Trump.
Well, for the month to date, and in fact for Q1 to date, equity outflows from Asia ex-China is nearing $40 billion. Now, to put this in context, this is the largest since the first quarter of 2020 at the height of the COVID pandemic, and is also similar to Q2 of 2022 following the invasion of Ukraine by Russia. So this extent of outflow so far in this current quarter is almost unprecedented and is due to the ongoing uncertainty of trade caused by US policies regarding tariffs.
At the same time, we're seeing funds flow into Asian debt markets. Just walk us through that, why we might be seeing equity outflows but inflows into the debt markets.
Yes, so equity tends to be very sensitive to risk factors, and given the heightened uncertainty over trade and the concerns around growth, that's why we had such a large outflow on the equity market. But on the debt space, because debt, particularly sovereign debt, is sometimes seen as a safe haven of sorts, we've actually seen inflows coming into the debt market. On top of that, there are expectations that some central banks in the region will continue to cut rates. That tends to benefit debt prices. Hence, there's also helping support debt inflows to some extent. But the size of the debt inflow is still small relative to the size of the equity outflow. So on a net basis, we are still seeing overall net outflows on the portfolio side from Asia.
We've got obviously more uncertainty coming in terms of trade tariff announcements from the US administration. Talk us through what you expect to see from here in terms of maybe the next quarter and the importance of that April 2 tariff announcement from the Trump administration.
So the 2nd of April tariff announcement is going to be very important, and that's going to help dictate whether or not we see continued volatility in flows in the region or we start to see a bit of a respite. Now, there's expectations that President Trump will announce reciprocal tariffs against some of the US's major trading partners, and I think that will include some of the economies in Asia as well. I think India has been cited as potentially being targeted, but other economies like Taiwan and South Korea, and in particular Vietnam, which runs a very large bilateral trade deficit against the US, could potentially be targeted as well. So once we know the shape of the tariffs, that could potentially cause a repricing as markets then start to assess what impact that might have on the respective economies. The overall uncertainty, and I suspect the tariff announcements won't just end there, because there'll probably be a period where there's going to be negotiations, which will just drag on the overall uncertainty factor, which will probably continue to cause fluctuations and volatility in the region's portfolio flows.
Couldn't go there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, March the 28th. Catch you next week with analysis of how those April the 2nd tariffs are going to affect markets and economies in the United States and around the world. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.